Hi, my name's George. Welcome to this week's Rational Thinking. Last week was a busy one for currency markets. In the UK, we had sterling rebound strongly ahead of this week's Bank of England meeting, and in Europe, the ECB meeting dominated all euro headlines. The pound rose sharply last week as investors began to doubt the belief that the Bank of England will cut interest rates at Thursday's meeting. The probability of an interest rate cut has now fallen to 50%. It was previously, at the beginning of last week, recorded at 70%. This came after positive jobs data and after the Confederation of British Industry reported a pickup in manufacturers' sentiment. The number of people in employment had risen by 208,000, which is the biggest increase since January 2019, and this is actually stronger than the forecasted rate of 110,000. It appears that whilst many still see an interest rate cut as a distinct possibility, better data and rising business confidence may convince policymakers that the January meeting is too soon for a cut. Another point to take notice of as well is that a lot of recent week data has also been pre-election, so January may be too soon in any case. We also saw last week in terms of Brexit, the House of Lords give its final seal to Brexit. So despite witnessing 5 amendments, Boris Johnson has now managed to pass his Withdrawal Bill through all of the parliaments. That bill will get royal assent in order to become law. Despite this, the risk of a hard Brexit still remains, and all important trade talks are scheduled to begin in February. Last week, the European Central Bank met, and unsurprisingly, interest rates and the stimulus programme were unchanged. However, they did launch a broad review of its policy that's likely to see new President Christine Lagarde redefine the ECB's main goal and how to achieve it. The Eurozone's central bank has previously fallen short in terms of the inflation target of 2%, and this comes even after Draghi had launched increasingly aggressive stimulus measures towards the end of his tenure. ECB rate setters did not make any policy changes on Thursday, but they did stand by the bank's pledge to keep buying bonds and, if needed, cut interest rates in order to keep the price growth in the Eurozone back to their original goal. This week is a busy one in currency markets, particularly with sterling. On Thursday is the eagerly anticipated Bank of England meeting, where the interest rate decision is expected to be made, and still there's a bit of a split on whether there'll be a 25 basis point cut or if there'll be no change. Alongside that, we'll have the release of the minutes, inflation report and policy statement, and then this will be followed by Governor Carney's speech. Then at the end of the week, we have the Brexit deadline. It'll be interesting to see if anything comes out around that. In terms of the Eurozone, on Friday we have core consumer price index year on year for January. That's expected to fall from 1.3% to 1.2%. And then we also have the gross domestic product release year on year for January, expected to fall from 1.2% to 1.1%. Then out in the US on Wednesday, we have the Fed interest rate decision expected to remain at 1.75%, so no change there. But that's then followed by the FOMC press conference, which will be useful to see the forward guidance on upcoming meetings. Thanks for tuning in to this week's Rational Thinking. As ever, if you have any inquiries or you'd like to discuss any of your upcoming currency requirements, please feel free to get in touch. We'd be happy to help out.